Hi students, welcome back. We have started the concept of the financial statement analysis, or simply how to read the financial statement. So we will continue that one. First of all, the very basic financial statement is the income statement. So we will start with the income statement. So this is normally the format, and we are talking about the income statement of what? Of the company. So first statement for any financial statement for the users of the financial statement. So the first statement is what? Is the income statement. And in the companies, obviously it is called as the statement of the comprehensive income, or simply income statement. What is the purpose? The purpose is to know the profit or loss, or simply the income or the earnings of the company for a specific time period. Now, the format, most of the companies are using these formats. We are talking about the trading companies, we are talking about the manufacturing companies, not about the service companies or for the banks. So normally we have a company name, the date or the period is there, then the specific year is there. For that specific year it is prepared, and then what we have this format. Now, first of all, they write the sales. Sales means what? This is the total revenue. Means how much they are getting from the customers through the sale of goods or services. Means they have selling the goods, they are selling the services, and the total amount what they are getting from the customers in the form of the revenue. So that is called as the sale. Then the cost of goods sold, especially the companies which are the trading companies or the manufacturing companies, if they are selling the goods, obviously there will be some cost. So that cost is presented here. Then if we deduct or subtract the cost of goods sold from the sale, we get the gross profit. Then we have our operating expenses. So these are called as what? Operating. Like admin expenses there, or simply we can say the office expenses are there, administration expenses are then selling or the marketing expenses or distribution expenses are there. Then we have a general expenses for the overall the company. So when we deduct all these, and if there is, for example, any other thing like we have a other income, other income from other sources, for example, company has some other resources which are not from the main source, and if there is any revenue which they are generating, so other income they are generating should be written here. So we will write that one. After that we have a earning before interest and taxation. Means this is what? This is the operating profit of the company, or simply called as the earning before interest and taxes. Okay. Then we have a interest, or what we call the finance expense. Means what? The company is taking a loan from the bank, company is taking a loan from the public or from the government or from any other source. Obviously they have to pay the interest on that. So that is the finance cost is there. So this is deducted. After that we have a profit before taxation. The next thing that we have is the profit before taxation, or we simply say the profit before taxation, EBT, or earning before taxation we can say. Then we have a tax, but every company has to pay the tax to the government. So the last point that we have is the profit after taxation. And most of the companies they also show one more thing that is called what? As the earning per share. For example, it is 1 and it is 1.5. Now if we look at the value, we are just assuming the value is like 100, and then we are using that one. So the sale of this company is how much? 100,000. Then the cost of goods sold is 60. So the gross profit, the gross income of the company is 40. Then we have our administrative expenses, selling, marketing, admin. Means most of the expenses are written here. So 6, 4, 7. So the total is 17. So from 40 we will again subtract the 17. So we will get what? 23. So this is the operating profit, or the earning before interest and taxation. Then the interest expense, company has to pay the interest, or the finance for that one. So we have a 2 for example, so it is 21, so it is again subtracted. Then we have a taxation. The company has to pay the tax to the government, so they have to pay 6 as a tax, so this is the again deducted. So then we have a profit after taxation, that is 15. It may be a 15,000 or maybe a 15 million, so for that. So if we look at that thing, so the first thing, if you remember, we have a ratio analysis and a trend analysis. We just compare the 2 years, but not with respect to any values or the ratios. We're just looking at the trends. For example, if we see the sale last year, 100. This year also 100. So there's no major difference in the sales, means the company is consistent in the sales. Obviously, due to the inflation, the sales should increase, but in this company it is not increasing. So one thing we have clear about that thing. So the sale, there's no increase. But if you look at the cost of sale, the last year the sale was 70. Now, the cost of goods sold was 70. Now it is how much? 60. So the gross profit, it was 30 last year, but now it is how much? It is 40. So it means there's an improvement. The cost they have reduced. But we will discuss this thing in detail. That there may be a positive thing, the cost is reducing, or it may be even a negative thing if the cost is reducing. Then the total expenses last year was 8, but this year it is 17. Obviously, there's a huge change, or you can say almost double expenses are there this year. So like total was 8, and now it is how much? It is only, last year it was 8, but this year it is 17. Okay, now the operating profit was 22, but now it is 23. It means there is an improvement. But if you look at there, from 30 to 40 means it was like a 10,000 difference, or 10 rupees or $10 difference was there. But here is only what? It is only $1 or 1 riyal or 1 rupee or 1% difference is there. And again here there is an increase. Here it was increase, but it is a huge increase. But here there is a very minor increase in there. Now the next thing, if we see the earning before taxation, and then from 4 to 6 last year the tax was 4, but now it is 6. It was 16, and now it is 15. If you see overall the performance of the company, the last year the net profit, obviously, which is the most important thing for any user of the financial statement. For example, if you are doing a business, for most important thing for you will be the net profit of the company. So the net profit of the company was 16, but now it is 15. Obviously, there are changes are there, so we have to see, because for everything here, the cost of goods sold, the expenses, the finance cost, the taxation, there is a notes, the complete information is there. Because if you look at the financial statement, there will be notes are there. So we have to go for the more in-depth information. And then if you look at the earning per share of this company, it was 1.5, but now it is 1. So we can say that the performance of company was better in the 2020 as compared to 2021 based on these figures. But obviously, there is more in-depth analysis that is required, and for that in-depth analysis, obviously what we need the ratio analysis, and then we will do the different type of the calculations in the profitability, in the long-term solvency, in the short-term solvency, liquidity, activities of the company. So all these will be covered, but the basic concept that we have, that how these financial statements are prepared and how we can look at the trend, that from previous year, is it better, or if there is any situation is improved, or there is any situation that is not improved as compared to the, like a previous year was better or this year is better. At least the 2-year information is there, so we can compare. So this is the basic concept of the financial statement, and we have discussed today the income statement, and we have seen that how things are changed over the year. Obviously, in the next lectures we will do the same analysis with the practical information of the companies, where we have original financial statements of the company, and then we will see that how the things are changing. And then, because for every information there is a complete notes, so we will go in detail, in depth study we will do, and we will see that how information is useful for the users of the financial statement. So this is the concept of the ratio and the trend analysis. And for the next lecture, obviously we will do some of the basic ratios, we will do some of the trend analysis, and we will see that how things are changing over the year. I hope you have understood the concept, and if still you have any doubt, if you have any question, you can ask me in the comment section. Thank you very much.